Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the three major US indices, that being the S&P500, the Nasdaq100 and the DowJones30 future chart. Just before I start today's video, if you have enjoyed my videos for the past couple of weeks or months or for however long you've been following me here at Daily Market Movements, then why not join my trading signal group? You can join today by scanning this QR code. It will take you to my website where you can sign up and you can follow my trades on a daily basis as well as receive my macro research just before the US markets open. But let's get started here with the S&P 500. Of course, as I mentioned during yesterday's video, we're coming off the back of some very strong gains last week, and I see the first half of this week as a digestion phase. Does that mean that we have to go and fall back down towards, let's say, 4,200? No, not necessarily. I just think that we do need to stop rising in the same manner that we were last week, because as we all know, the markets don't move like this. Most of the time they go up and down, either grinding higher or grinding lower. And for the case of the S&P 500 here, over the long term, it does seem to grind higher. So I think that some digestion is needed here. I'm looking for a move below 4,300. If that move does occur, then that's something I'm looking to capitalize on. So this is an area where I am looking to add exposure again to the S&P 500. It's an area where I do believe we will target within the next couple of days. Then going into the end of the week, I think that's when we'll have a real go at hitting the top of this, the top of his range, this downtrend that we've been trading in since the beginning of August, and that would take us to a pretty much 4,400, and there is even a potential that we could even go and test, let's say, 4,500, where these swing highs were back in mid-September. So I do like the S&P 500. I just feel like you can get a better entry point in a couple of days' time once we do see a retest of its 50-day EMA down around 4,300. Very similar to the S&P 500 over here in Nasdaq100, but unlike the S&P 500, we are actually testing this resistant area. I do expect us to go and backtest the 50-day EMA at some point. That again is going to be somewhere where I would be putting a significant amount of money to work. I just think that the risk-reward ratio at this moment in time isn't very attractive. I think that if we can get a pullback, that then offers a better entry point, and that is somewhere where I would be looking to enter the Nasdaq100. Same here for the DowJones30. Very similar to the Nasdaq100, we're testing this upside resistant area where we've been falling pretty much since the beginning of August, creating a series of lower highs, and I think that a back test of this 250-day EMA down around 33,790 would offer a better entry point. And I think that going into year end, we will see this market break out of this area and potentially go and target the the yearly highs up around 35,500. I like all three major indices. We're seeing breakouts in stocks like Apple, for example. There you go. We're breaking out of this downtrend that we've been trading in since the beginning of August. We're seeing stocks like Nvidia trade back up towards their all-time highs. We're seeing Microsoft that's about to go and hit a brand new all-time high. So there are some very bullish signs in the market. And then just quickly drawing your attention to my signal group, I did post some research in here this morning, and I kind of identified that last week we saw some really strong breadth where all parts of the market did actually in fact participate. And in fact, the stats that I'm getting from last week, when the market has previously done this dating back to 1971, this is the 12-month outlook. In its first column here is 1 month out from when that stat was achieved in terms of the massive amounts of breadth that participated in the rally. This is the 3 month, the 6 month, and 12 month, and as you can see, 12 months out, you do see an average return of 23.9%, and in a short term basis from 1%, that's 6%, a 6% yield from when that stat occurs. And here is a chart actually dating all the way back to 1971, and you can just see these several points when that statistic of breadth has participated in the rally, and you can see the S&P 500 traded very nicely towards the upside from there onwards. So I think it just goes to show that the market right now is looking very, very attractive at current levels, but I think that we could see a few more days of consolidation, and we could from that get a better entry point. But going into year end, we have seasonality that's going to support us moving into the beginning of 2024, and I do believe that there will be some fantastic buying opportunities. If you've enjoyed today's video, guys, then make sure to scan this QR code on your screen. It'll take you to my website where you can sign up to my signal service. So thank you very much for getting involved. I look forward to welcoming you all over on my Telegram group chat, and if you don't choose to sign up, then I look forward to welcoming you all back to the YouTube channel tomorrow.